Your paycheck is definitely lying to you. You think you're making good money, but the truth is this: the IRS is eating before you even touch your plate. You grind all month, you check your account, and suddenly you're asking yourself, where did it all go? Now here's the cheat code the wealthy never tell you. They don't fight the IRS. They don't run from taxes. They flip the rules and make the IRS their business partner. Crazy, right? But that's exactly why rich people keep more money while the rest stay stuck. Today, I'm pulling the curtain back. I'll show you how to use the same rules legally, no shady moves, no secret offshore accounts. Because let's be real, people who try to cut corners end up in the worst places: audits, fines, court. In extreme cases, jail. We're not doing that. We're staying legal, we're staying smart, and you'll walk away with tools that wealthy people pay accountants thousands to explain. Stick with me, because after this, you'll never look at money or taxes the same way again. This video is for you if you've ever looked at your bank balance after payday and thought, wait, that's it. It's for you if you're making good money but somehow still feel broke. And most of all, it's for you if you want to finally flip the game so money works in your favor instead of against you. By the end of these 9 steps, you'll understand exactly how the rich legally lower their taxes, protect their income, and keep stacking wealth. And you'll feel empowered, not drained, every time tax season rolls around. So let's get into it. Step 1, flip the order. Spend first, tax later. Most people play the tax game backwards. You earn money. The government grabs their cut. You live on what's left. That's the employee cycle. But the wealthy flip the script. They earn money, they spend on their business, and then only then they pay tax on what's left. Think about that for a second. Imagine you earn $100,000. As an employee, you could lose $25, $30K straight to taxes before you touch a dime. But as a business owner, you can spend on equipment, marketing, travel, even part of your home office, and those reduce your taxable income. The government literally says, okay, if this was necessary for business, you can subtract it before we tax you. It's not a loophole. It's not cheating. It's the law. You've just unlocked the biggest shift. Stop living like an employee, start thinking like a business. You'll feel more control the moment you see this. But here's the question. What actually counts as a business expense and what gets you into trouble? Let's talk about that. Step 2. What counts as a business expense and what will trigger red flags? Not everything you buy can be written off. You can't call your vacation to Miami a business trip unless you really were meeting clients. You can't buy a PS5 and claim it's for office research. The IRS isn't dumb. What they expect is simple: your expenses should be ordinary and necessary. That means things a normal business in your field would reasonably spend on: laptops, internet bills, travel to clients, advertising, office supplies, yes. A random yacht trip because you wanted Instagram pictures, no. If you blur those lines, you invite trouble. The IRS has auditors trained to spot patterns. And let's exaggerate for a second if you get reckless. It's not just a letter in the mail. In extreme cases of fraud, people have ended up in court, fined heavily, and even jailed. It's not just losing money, it's losing peace of mind, reputation, and freedom. Now you know the safe line. That alone reduces your risk and gives you confidence to use deductions the right way. Once you know what's safe to deduct, the next level is choosing the right structure, because that's where the wealthy save even more. Step 3, business structures, LLCs, SCORE, and LLC protection veterans, your personal stuff if something goes wrong. An S-Corp can reduce the payroll taxes you pay. A C-Corp has even more complex advantages. Each one is like a tool. You don't use a hammer for every job, but when you pick the right tool, you save time and money. Take an S-Corp as an example. If you make $100,000 in profit, you can pay yourself a reasonable salary, say $60,000, and then take the rest as distributions. That can lower certain self-employment taxes. But notice the key word, reasonable. Pay yourself $10,000 while living like a baller, and the IRS will knock on your door. Push too far, and you're not clever, you're asking for an audit. You've just learned that structure equals savings. That's a knowledge bomb most people never even hear about. But structures are only the start. The real fun comes with write-offs and depreciation. Step 4, depreciation, write-offs, and paper losses. This is the rich person's candy store, depreciation. Let's say you buy a car for business or equipment for your company. You don't deduct it all at once. You spread out the wear and tear over years. On paper, it looks like your business lost money, but in reality, you're still making money. That's why you'll hear about billionaires paying little to no income tax in certain years. It's not that they're hiding money under a mattress. It's because they own assets that lose value on paper, but make them richer in real life. Now, let's exaggerate the danger again. If you fake these losses, if you make up numbers, you're not just bending the rules, you're breaking them. That's fraud. That's how people end up with IRS agents freezing their accounts. That's how people ruin their futures. You've now seen how assets can legally lower your tax bill. That's a weapon you can use once you step into ownership. Depreciation is powerful. But there's another hack. Rich people love retirement plans. Step 5. Retirement plans for business owners. If you're an employee, your company might offer a 401k. That's nice. But as a business owner, your options blow that wide open. With things like a solo 401k or SEPIRA, you can put away far more pre-tax money than employees. That means two things. You reduce your taxable income today, and you build wealth for later. It's like in the future you are thanking the present you while the IRS is giving you a discount. Mess it up, though. Over-contribute or try to play games? You don't go to jail for that right away, but the penalties and headaches are brutal. It's like locking yourself out of your own house. You've now got a way to win both today and tomorrow. Lower taxes now, more money later. And speaking of later, let's talk about the rich person's favorite, real estate. Step 6. Real estate and 1031 exchanges. Ever wonder why so many wealthy people love real estate? It's not just rent checks. It's a tax strategy. One of the best tools is the 1031 exchange. You sell one property, buy another, and push off the taxes. Instead of giving Uncle Sam a cut right away, you roll the money into your next investment. Do this again and again, and your empire grows while your tax bill waits. Here's the warning, though. Try to fake it like pretending your vacation home is a rental property and you're asking for trouble. In fact, people have been criminally charged for lying about this exact thing. That's how far it can go. You've just seen how real estate grows wealth while delaying taxes. That's one of the biggest cheat codes rich people play with. Now let's step back. None of this works if you only think about taxes once a year. Step 7, plan year-round. Most people panic in March or April. Rich people plan in January. They sit with accountants, they move money strategically, and they avoid ugly surprises. Planning isn't glamorous, but it's powerful. Buy that equipment in December instead of January, and it could save you thousands. Delay income until next year, and it could drop you into a lower tax bracket. Small moves, big results. But if you try to plan by hiding money or creating fake invoices, you've crossed into fraud. That's where you see headlines, court cases, and worst-case jail. You now know that boring planning beats last-minute panic. That's the quiet skill rich people rely on. And here's the truth, they don't do this alone. Step 8, hire real professionals. Rich people don't just have accountants. They have tax strategists. They pay people not just to file taxes, but to design their money game. The good news? You can too. Even small businesses can hire pros who save more than they cost. A great CPA can explain if an LLC or S-Corp fits you. They'll flag deductions you didn't know you had. They'll keep you legal while you maximize your advantages. Follow random internet gurus who promise to erase taxes. That's a trap. Many of those shady hacks are flat-out fraud. People who follow them get burned hard. You now know that paying for smart advice is not an expense. It's an investment that pays you back. Transition, and when you stack all of this, that's when the real magic happens. Step 9, stack the strategies. Each step is good on its own. But stack them: structure, expenses, depreciation, retirement, real estate, planning, pros, and suddenly you're playing the same game the wealthy play. This is why someone making $150 as a business owner can feel wealthier than someone making $250 as an employee. Same money, different rules. You've just seen how stacking these moves transforms your money life. That's not a theory that's proven. Let me be crystal clear. If you lie, cheat, or hide, you're risking everything. Not just an audit letter. Not just some fees. I'm talking about frozen bank accounts, destroyed reputations, and yes, in the worst cases, jail. Don't play that game. Do it legally, though? And suddenly, the IRS becomes your unwilling business partner. You use their rules against them fairly, legally, smartly. You now have the cheat code, and you're playing the game the right way. So what should you do this week? Start small. Launch a side hustle if you don't have one. Track every expense honestly. Sit with a CPA. Open your eyes to structures like LLCs or solo 401ks. This isn't about cheating the system. It's about learning the system. And when you do, you'll keep more of what you earn. You'll grow faster. And you'll feel empowered instead of drained every payday. If you found this eye-opening, you definitely need to watch the next video. why your paycheck feels smaller than your salary. Because once you see how the system shaves money from your paycheck, you'll understand why these business strategies are your only real way out. You don't want to miss it.